Good morning, everybody. Today we're going to be covering Chapter 3, and this is Part 1 of the lecture. I'll be talking through the PowerPoint slides, which you can find on Blackboard under the Chapter 1 and Chapter 2 tab. We start with this week with talking about the types of careers available in accounting. And on Slide 2, you see examples of some of those. You have external auditors, and these are essentially auditors that are external to the organization and go in and examine the books and report to either investors or third parties. Internal auditors are a specialized type of CPA who investigate the company from inside. So they are employees of the companies. However, internal auditors have a type of independence because usually they report to the board of directors or to the other government structure, depending on the type of organization. A forensic auditor is somebody who does an investigation. Oftentimes it is a fraud type investigation. And forensic auditors are called in to do special investigations. The fourth type is a government auditor, and that's actually where my background is. Government auditors are really a specialized case of external and internal auditors. In my work history, I worked for the legislative branch, and we audited the executive branch, and because we were a different branch of government, our organization was considered independent with the group that we were auditing. So all of these are excellent types of careers in auditing, and we'll be talking about all of them as we go forward in the class. An audit is mainly the type of work conducted by an external auditor. So for the most part, we'll be talking about that in this class. If you have questions about the work of the other groups, we will periodically talk about it, and you're welcome to ask questions at any time. On Slide 3, we have the types of services that are offered by CPAs. And the primary type is an audit service. The most basic type of service that we offer, and probably the most important, is a financial statement audit. But we might also examine and report on the internal controls. A compliance audit is based on whether an organization complies with a certain rules. One I've worked on is an NCAA compliance audit, where I tested whether a university had complied with NCAA rules. An operational audit is one where a group of auditors goes in to examine how effective and efficient an entity is. These are often required in governments. Sometimes governments set up an agency for a particular purpose, and they may have operational auditors come in to find out if that entity or agency is being effective at delivering what the legislature intended. Then we have forensic audits, which are often investigative. In addition, CPA firms offer attestation services, and you're given an example of that here. And we have other types of assurance services. And then the fourth category is non-audit services. CPAs are highly trained business people, so they can offer a variety of important services that many small and large businesses need. So those include tax preparation and planning, management advisory services like helping management evaluate whether they want to make an acquisition. A compilation is where you take a set of transactions and compile a set of financial statements for the client, and a review service is where you go in and conduct tests that are more limited than an audit, but it provides a type of oversight of what is going on. So those are some of the other things that CPA firms can be involved in. The largest CPA firms, which we're going to talk about on the next slide, offer a large range of services. So on Slide 4, we have sort of the structure of public accounting firms, both in the U.S. and globally. The public accounting profession is dominated by 4 major CPA firms, and those are PricewaterhouseCoopers, Ernst & Young, Deloitte, and KPMG. These 4 firms operate globally, and across the globe they probably have on the order of 65,000 employees. In the U.S., each of them has about 80 offices and probably 2,000 or 3,000 partners, many more partners than that across the globe. So it is a partnership. All 4 of these are, I would imagine, are some of the largest partnerships in the world. And when we get to the legal liability chapter, you'll understand more why they have to be a partnership. We have also what we would call mid-tier firms, Grant Thornton, BDO, and RSM McGladrey. These are global in nature, but they're nowhere close to the size of the big 4. I read an article once that said if you took numbers 5 through 17 of the largest CPA firms, they would not come, adding all of those together, they still wouldn't come close to the smallest of the big 4. But these 7 that are mentioned here, most of whom interview at FAU in the fall and spring for talent for the South Florida offices. We also have regional firms, which can be very large. There's some regional firms with over 1,000 employees that I'm aware of. And there are several large ones in the South Florida area that recruit at FAU. And then you have local firms that are much smaller. And some firms are as small as 1 person, and others might have, a couple of offices. So the way an audit is conducted, ironically, is pretty much the same across all 4 of these sizes. It will just depend on the size of the client. The big 4, they, of course, audit the largest of the companies out there. If you look at publicly traded companies, the 98% of the capital on Wall Street is audited by the big 4, but at the same time that accounts for 80% of the companies. So the other 20% of the companies, comprising 2% of the capital, are audited by these other groups. Grant Thornton is pretty big, but it's not quite the size of the other big 4, but it's been growing in size in recent years. So we will talk about more about these firms as the semester goes on. We'll talk about cases of examples where some of these firms have gotten into trouble, and we'll talk about the regulatory environment that each of these different types of firms face. On slide 5, we have an example of the typical structure of a CPA firm employees. And this is true, again, for any size firm. So the owner of CPA firms are required to be organized by law as a partnership. And so the partner will be the head person on an audit team. And it is a partner who has the responsibility of gaining clients. They have the responsibility of deciding whether they want to do an audit. And they also have the responsibility of signing off on the audit opinion. And at the same time, if they mess it up, they have the legal responsibility of dealing with it. So the partner has oversees the job and makes sure that everything is done properly. Let's start at the bottom, besides partner, and go up. The entry-level job for a CPA firm is an associate or staff person. And those of you who are interested in auditing as a profession would start off at this level. At this level, you have to be trained because arguably you wouldn't have much audit experience. So the work environment is structured so that you can get a lot of training. So the staff person comes in, they usually get training the first week or 2 of their job, And they will be assigned to an audit team, and that team will consist of seniors, managers, and partners. And so the associate is always being overseen, and their work is always being reviewed by those who are a level above. So the associate or staff person in the early part of their career will be assigned a part of the audit. Suppose you might be assigned, for example, cash, and you would be given a list of audit procedures to conduct in order to determine whether cash is fairly stated and whether it meets the assertions that we talked about in Chapter 1. And then the work that the associate does is reviewed by the senior, and the senior in turn makes review points or review recommendations. And then the associate takes those recommendations and has to go back and make sure that they've done the work. So that's an important element of training, is that your work is constantly under review, and it's through that constant review process that you actually get a lot of insight into how audits work. So people at the associate or staff level are usually at that level from 1 to 3 years. After that level of experience, they are promoted to senior. And at the senior level, you're given more and more responsibility. So you would supervise the work of the associates and review their work. Seniors usually are at that level from 3 to 5 years, and then if they continue to work at the firm about the 5th year, they would make manager. So a manager has increasing responsibility. You can see the responsibilities listed here. Many firms also have somebody called a senior manager, and that's not listed on this slide, but it is just a higher level of responsibility than manager. And the partner can really rely a lot on the senior manager. The senior manager is someone who's in a position who's probably going to make partner in the next couple of years. So at about the 10th to the 12th year, people are promoted to senior manager. And then after senior manager, they make partner. Now, in order to be a partner, you've got to have what I'll call the right stuff. That means you have to be able to sell business. You have to have good technical knowledge, and you have to have the trust of the other partners. You get voted in, and there's a pretty significant screening process. Some people don't want to be partner because there's a lot of responsibility and some amount of financial risk. If you're a partner in a CPA firm and somebody else screws up another partner, you're on the hook for the penalties. This happened with KPMG back in 2003. The tax group got in trouble. The federal government fined them $457 million for the misdeeds of the tax partners, and all the audit partners had to pay part of that fine. So there's a lot of risk in being partner, and at the same time also a lot of reward. So there's also another career path for those who don't want to be partner, and that is a person who's called director, and it's the highest level one can achieve if you don't want to be a partner. Directors can sign off on audit reports, but they don't own equity in the CPA firm. In the case of audit firms that do work on publicly traded companies, you must be a partner in order to do the audit of a public company. So here at FAU, starting in the fall, we have the Career Center, and many of the CPA firms listed on the previous slide actually interview here. So you should consider interviewing for a job in the fall. Even if you're a graduate, if you graduate this summer, the job possibilities are available to you. So keep that in mind, and I will say this, that Career Center and these firms start interviewing very early in the fall. So if you're interested in interviewing for an audit position, you need to get over there and get your resume submitted so that you can be ready as soon as the fall semester starts. So this is the end of part 1, and you'll have a couple more sessions later.